Now let's head to Nigeria, where the Naira traded firmer on the interbank forex market today after the central bank sold dollars to try and ease shortages. The Apex Bank has sold around $4 billion in spot and forward trades to clear a backlog of dollar demand, but it continues to intervene on the interbank to improve liquidity. Now, as a result, the Naira traded as firm as 281.50 to the dollar from about 284 after the intervention. Nigeria, of course, ditched a 16-month peg on the Naira to allow the currency trade freely on the interbank market. However, traders say dollar liquidity remains tight, leaving the central bank as the main supplier of hard currency.
The free float of the Naira has been a long expected move. I think the market has been eagerly awaiting. In fact, when the announcement was made last week and the movements started happening this past Monday, you saw stocks in Nigeria rally. But of course, the short term is going to be marked by volatility as traders, bankers, and regulators begin to feel out the process of where the Naira will end up. The rates closed early this morning. Quotes were being spread between about 282 and 295 Naira to the dollar. So again, the Naira hasn't actually settled yet, but free market trading has definitely pushed it up closer to the black market rate that we saw over the past 16 months.
And Aubrey, what are your thoughts or views that we'll continue to see the Naira depreciating? Some believe that by September we would have seen the Naira fall by as much as 10%. Is that your view?
Well, it'll be an additional 10% because remember, it's fallen over 30% already since it became free floating. So I also believe, along with those commentators and experts, that we will see a further depreciation of the Naira before it settles, probably somewhere in the 300 range to the dollar. And then Nigeria can begin to build its way back towards growth, which is a long path, and it's a painful path in the short run, definitely marked by inflation and difficulty with imports.
Do you think we may see the federal government revising its 2016 budget, given, of course, that a weaker Naira makes its forecast debt load more expensive to service going forward?
Yeah, there have already been announcements that the spending plan that was outlined in the 2016 budget will have to be curtailed just because the money isn't there to spend on the large projects. How much it's going to be curtailed is what's uncertain. And in the very short term, I think the government stands to benefit because the 2016 budget benchmarked oil at $38 a barrel. So if it stays above 50, that does create kind of a surplus. Additionally, there are plans to borrow more. The Minister of Finance, Minister Adeshwan, she came to London not too long ago just to explore borrowing rates around another Eurobond. So I think you'll see Nigeria return to the international debt market to take on more debt. And frankly, that additional debt is, while it might be troubling to some, it doesn't put Nigeria's debt to GDP ratio at too high of a level. It's currently at around 13%, and I think you'll probably see it end up in around 20–25% as this new debt's taken on. And those numbers are quite manageable compared to other countries in the region and to global norms.
Of course, that's from a conversation I had earlier with Aubrey Ruby, who's a partner at Bailey's Emerging Market Fund and a co-founder of Africa Expert Network.